I think builder codes in its truest, most raw, insane kind of form will effectively put that to bed and make it look like kids selling lemonade outside. Because there is literally no product on planet Earth, like not even Shopify is this simple, not even Amazon is this simple. There's no product on planet Earth right now that literally hands you $4 billion of liquidity, says, hey, we're not going to charge you shit for this, and then you can go and make money on it. You could charge up to 0.1% on the notional value of a perp trade, and you could charge up to 1% on a spot trade. There's literally not anything on the planet that does that at scale or even like on a micro level of this. So yeah, builder codes alone should make Hyperliquid worth several other L1s combined. Builder codes alone in their truest form.
Quick shout out to Permissionless IV coming this summer to New York, June 24th through June 26th. We'll have speakers from all across the industry, including Hayden Adams, Kyle Samani, Guy Young, and more. Get your tickets today by following the link in today's show notes, and make sure to use code BELL10 to save 10% on your purchase. See you there. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. Hey everyone, this week's episode is a cross post from 0xResearch. We discuss whether the HyperEVM has been a success, HyperCore's growth moving forward, and the impact of builder codes and HIP3. Finally, we dive into how to value the HYPE token. Enjoy.
What's up, guys? Welcome back to another episode of 0xResearch. Today, we have a packed podcast. I'm joined by Tolks, Monk, Max, and Omnia. I think everybody here has introduced themselves except for you, Sunny. Do you want to give a short introduction of what you do, who you are, and then we can get started?
Sure. My name is Sunny, otherwise known as Monk on Twitter. I am an enterprise research analyst at Masari. Nice to be bridging the gap here between Blockworks and Masari. This is a good breaking the bread moment. But yeah, I've been writing about Hyperliquid since I think last summer, so almost like a year ago now. I've dropped like 3 reports on Hyperliquid, 1 quick report on Unit, and probably best known for the valuation report that I did, saying that Hyperliquid should be worth like 12 to 30 billion when it was trading at like, I don't know, $1 on Avo. So there we go.
Very good. Very good flex and dunk on everybody who didn't buy that at that time as well. Yeah, Hyperliquid ends up bridging gaps and allows us to be friends. This pod is, to the listener, will mostly be about I think all will be about Hyperliquid. That's the reason that we collected the brightest minds and Tolks and me to talk about it. I think I really don't know how to bridge into this because I never really do like specific topic pods with analysts, but I think maybe the best way to start is Max, Omnia, Tolks. Last time we chatted, we mentioned that we had a few fears about Hyperliquid, like what our bear cases was and what our bull case was. Omnia, one thing you mentioned was stablecoins. Max, one thing you mentioned was stablecoins. Omnia, you mentioned some stuff about HyperEVM. Tolks, I can't remember what you and I said, brother. I'm sorry. But in general, to the group of 3 apart from me, has anything happened or not happened? Like, do you think you were proven correct or not? How do you think like the past 3-4 months has been for Hyperliquid since we did the pod?
I suppose I'll kick off with EVM related stuff. People called HyperEVM a failure when it went live, and I think this is a pretty retarded take, honestly, and probably spicy, but I really don't care. I think it actually is very, very much retarded because of the fact that the Hyperliquid team did explicitly say that this is an alpha or beta of HyperEVM. It is the first time that an EVM is being essentially wedged next to an exchange, especially such a performant one that handles an insane amount of volume. I think people very much misunderstood the magnitude of what was done, and Jeff put it really well when saying that a literal jet engine was changed in mid-flight. I think it is literally the equivalent of that on chain. And essentially, this happened with minimal, if not zero, downtime. And the other day, I put something out, which is pretty funny. Teams, especially at the ecosystem level, like to invest a lot of time, energy, and obviously money, general resources, logos, and whatever, into giving some sort of upgrade to a network or some sort of like whatever catalyst they're creating for the network. That will be a turning point. They like to give it like all these cool code names and stuff like that, like it's some world-changing operation. And then Hyperliquid literally just announces on Discord, "Hey guys, network upgrade at such and such time on this day. Expect 5 minutes of downtime. Sorry if this inconveniences you." I mean, like these guys just operate at such a different capacity that people are just not used to. And I think this reflects at every single level, by the way. It's like, it's just at a social level, it's just extremely weird. So people don't know how to price this because of that. And then obviously at the asset level, which we'll talk on, I'm sure, later on in the pod. But yeah, I think just touching on the EVM point, I think like one of the risks that I highlighted was the fact that EVM wouldn't get adoption, like as a general risk, right? Like something people see um, as like a risk, and something that I just wanted to be fair about myself as a builder on EVM, like as a risk to myself, and like the protocol that our team is developing. It's like one risk is that it wouldn't get traction. Did I believe that? No, but the point being, it's a risk, and of course can't be naive. And I think that risk is very much proven wrong. The EVM has gotten a shit ton of traction, and I did not expect Solana trenchers to pop over anytime, as quickly as they did, and they have, which has been really interesting and not something I factored in the short term. So anyway, I'll stop there. But yeah, I hope that covers my part.
Um, on my end, I would say my biggest fear back in January was around, whether Hyperliquid would just be allowed to compete on even terms with the rest of the industry. I think that's proven out, and I've been, pleasantly surprised with how, crypto policy has been developing under the new Trump admin in particular. I think, we've seen kind of representatives from all parts of the industry kind of contribute to some of these bills that are moving forward and some of the, um, discussions being had. So I personally, view that risk as being smaller as it may have been back in January. And I would also just echo, Omnia in that I think the expectations around the EVM at that time were, quite nebulous, and it was deployed for the first time back in February, I think around like a month after we did that podcast episode, and it was a slow burn. But today we're sitting at, I think, 1.6 billion in TVL, looking at DeFi Llama, and that level of liquidity coming to the system has been a significant boon, in my opinion. So between those two, fears, I would say we navigated it quite well.
No, completely agreed. When I wrote about Hyperliquid like a month back, Sunny, I've also written free reports. I don't want to be that guy, but just FYI. One of the things that I wrote was that, to me, it kind of made sense that the HyperEVM would always kind of be a sidecar, because the core HyperCore is just so. It makes sense for that to continue as the main product, especially since it makes a lot of money and it's a very, very good product. And I always thought that HyperCore would mainly be used for lending, margin, LSTs, collateral, etc. Like on that slow DeFi, let's say. But when I checked the data, it was actually a lot of swapping. AMM usage is quite high. I think at that time it was HyperSwap. I'm not sure what it is now. Like the leader. It was also drip trade, so NFTs were also quite popular. So I was pleasantly shocked. And since then, this isn't data on the HyperEVM is kind of tough. We have some built out, but from what I have seen anecdotally, typically over the past, let's say, year, if I'm in a group chat, most people will be talking about Solana tokens. There's been, I would say, a shift over the past 2 months where it's still Solana dominated, and then I think like if you're not in your Hyperliquid chats, you'll see that in the general chats, most of the time people are still talking about Solana trenches, like those Japanese soldiers that never left the island. But it's like 10% 20% now are like shilling Hyperliquid, HyperEVM tokens, which I think is a pretty meaningful shift, especially for something that's relatively new, doesn't have the top specs. I think they just got like the small block times to 1 second. Omnia, correct me if I'm wrong, because I know you
Yeah,
posted
literally
that.
48 hours ago or something.
Yeah. It's not like the most performant chain, but like you mentioned, they've also been very explicit in that this isn't meant to be the most performant chain initially. Like it's just something that they're building out on the side. Omni, actually, one thing you mentioned was that they're not great at comms. Well, you didn't say this. I'm saying this, so they can't.
Yeah.
But I'm saying that they're not great at comms, in that they'll just launch an update, upgrade, like a network upgrade for 5 minutes, and then they'll like cut block times by half. So I'm like, you don't really see a lot of roadmap from their end, or like a lot of this is our like final goal. On the one end, that's kind of daunting, but on the other end, it's like you kind of trust that they're going to be working towards this, as opposed to going out with this massive roadmap and saying, yeah, we're gonna like get into this, and then they never really do anything about it over the next 3 months. So
And they
it,
also take feedback well. That's kind of the crazy part. It's like it's refreshing that they don't talk shit before it's actually done, which is great. But the thing is, they actually also take feedback, because that is like maybe a risk to add on to like what we discussed a few months back now. It's like, oh, like, they don't talk. Yeah, sure, but like, do they take feedback? And the reality is they do. They take feedback from the Discord channel. They take feedback from people on Telegram who want to list a certain coin or like trade something. Like, they actually take way more feedback than people would realize. But anyway, just thought that was a cool caveat.
no, it's a good point. One more thing, I'm gonna talks cut me off.
No, I mean, I think our pod, what was it, like 6 months ago now, was it a lot of that stuff remains true. I think one of the biggest things for me, um, again, we were trying to like hypothesize about bear cases without like actually wanting to, be a bear. Um, but I think for me, it was just like the points program. We've just seen the perp dex angle. We've seen it done 1,000 times in crypto, and somebody was eventually going to get it right, and to the point where it doesn't matter anymore about what anybody else does. And Hyperliquid has definitely done that, and like you can put that argument to bed now. But I think that you look at the Dex to Sex, the futures trade volume. You look at the protocol, the market share stuff that the block has. They have good data on that. Um, but yeah, that was the main concern for me. I remember saying that like before we logged off the last pod, and it was just like, look, we've seen protocols have this kind of angle happen before, and there are protocols that would have like dominant market share for a month, 2 months, 3 months while their points program was going on. And we've seen that Hyperliquid, again, we talked about it 6 months ago, like this is different from every other protocol, and we've seen that played out. So yeah, I think you can put that argument to bed, and we'll talk about the hyper EVM and what that brings to the hype. But the main downside, I think, to me, was what is the potential for another DEX to launch a points program? And honestly, like you see it nowadays with, I'm sure everybody's familiar with Lighter now, and like people talk about that, and it's really generally just because they want the hype airdrop that occurred. They want that to happen again. But since then, like everything has just been, I mean, hype has been the execution, everything about the chain, the token, like the buybacks, everything is just it's amazing. So
Yeah.
yeah, I think we can put that, a lot of the bear arguments that we were kind of forced into talking about 6 months ago, like I think you can put pretty much all of those to bed.
Today's episode is brought to you by Ledger, the global leader in digital asset security. Celebrating 10 years of innovation, Ledger is trusted by 7 million users, secures 20% of the world's digital assets, and remains the most secure hardware wallet for your crypto and logins. Follow the link in this episode's show notes to grab your Ledger today. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research.
I just pulled up the chart. People didn't see it, but sex to dex ratio is now at 25%. I'm actually curious what you guys think is. So one of the things is that they've clearly been taking a lot of volume away from sexes. It almost feels kind of stupid for it to be compared to other dexes at this point, because it's like, I think it's at 90% now for the relevant dexes. Overall, it's like 80, 85%.
Yeah.
Sonny, maybe this one you can speak a bit about. Like, how do you think about competition in that space? Are you comparing it now to sexes? Or are you still like, this is just the perps landscape is just going to keep growing and growing? How do you think about the HyperCore going forward in terms of growth?
Yeah, I think I posted a thread, like long form tweet recently about this. I actually do think this is a reasonable fundamental bear case for Hyperliquid's growth trajectory going forward, which is that a lot of the perp dex volumes that you've seen it accumulate so far, a lot of that is just latent on-chain demand from like the perp dex vacuum of not having a good on-chain solution for it for basically since the inception of blockchains themselves. And so now that we have a super performant, highly liquid on-chain order book product in Hyperliquid, there are a lot of just natural user acquisition benefits of being like the only venue that is actually good and that actually works really well at a high level and can be even be compared to sexes to a certain extent. And I do think that's going to get harder on the perpetual side going forward, because eventually my guess is maybe around like 20 to 25% of Binance's volumes. Eventually, for derivatives, you're going to hit the point where you have to either win over users from another venue, that being centralized exchanges, or you have to create net new users on chain, which happens every day. Like every day, someone in the Masari office like hops on Hyperliquid for the first time, and within 2 weeks, they're like the most degenerate perp trader I know. So it's happening all the time, but it'll take time. And so I do think, at least on the perpetual side, you're going to hit this wall eventually where it gets much harder to break through from like 20% of Binance's perp volumes to like 25 to 30 to 40 to 50. I think this team can execute its way there. But I think the real opportunity is actually on the spot side, where you haven't really seen any performant on-chain order books be able to take even on-chain volumes from AMMs. Like if you look at where BTC is traded today, where ETH is traded today, where Sol is traded today, they're mostly traded through like concentrated liquidity AMMs on like Orca, Aerodrome, Uniswap V3. And so one, that's a big opportunity for Hyperliquid to start stealing some of that volume away from those venues through its spot product with Unit launching BTC, Sol, ETH, Farcoin. But two, like that's just untapped potential that it has relative to Binance Spot or relative to Sex Spot. And they've obviously found incredible PMF routing spot transactions through their order books. And so we did the analysis a couple of months ago on centralized exchanges. Spot volumes tend to be around 30% of derivatives volumes. And so that's like an incremental 30% in volumes you could just add as like white space for Hyperliquid. So I think for up only growth trajectory, I'd be paying attention to spot. On the perpetual side, I think it's going to be kind of like a slow grind eventually to get higher. But at the same time, I don't think any of these on-chain competitors will have a chance at stealing any of Hyperliquid's share for a while.
Yeah, I
I
think.
have an interesting question for you guys, by the way, that has to touch on the spot side. So, combined users between like just 3 top of mind exchanges, Coinbase, Binance, Bybit, etc., is like in the hundreds of millions, right? Hyperliquid is sub 1 million in terms of active or registered addresses. Obviously, this could be several people controlling one address or whatever. So obviously, the volume per user is just honestly fucking ridiculous. I think this is really not talked about enough. But that's separate to this point specifically is like one thing that I think several community members, myself, Max, many others, right, like have done or like how should I say have more so taken an interesting step in this kind of direction of like teams actually TGEing on Hyperliquid or factoring in the Hyperliquid exchange as part of their listing strategy, because I think I don't know if teams are tired enough of getting rinsed for like a $5 million cash fee and then 5% of their supply or something. I don't think they're tired enough, honestly. I don't know what gets them there. Is it the fact that like the Binance perp listing or listing at all just equals like death for your token? probably, at least in the short term. We're seeing this in a lot of tokens happen now for the most part. Like you get every exchange listing and nobody really gives a fuck anymore. Everyone just wants the Hyperliquid perp listing, which is 100% true. Like there's several tokens that I would literally never touch with like a 40,000 foot pole, but I would 100% trade on Hyperliquid, right? And that's just me. And by the way, like I'm very much in the, Monk was talking about new on-chain users in the Masari office every day. Like one of us, like I'm literally the definition of a perp retard. I've said this in many other talks as well, which is like for me with regards to perp trading, I guess I'm like the Hyperliquid dream user because for me, if like there's 40x leverage available, and like why would I use 10? Like why would I use 39? There's like an extra piece of meat to squeeze off. So anyway, I think there's a lot of users out there like that, right? And there's like a crazy correlation between meme coin traders and perp traders with actually crazy difference in kind of like I don't know, almost efficiency. It's like they get the same kick or dopamine rush, but without the um, quote unquote hard work that goes into meme DD, which is like, oh, did the dev set up TG? Did the dev pay Dex? Like, did the TG get hacked? Did they set up mods? Like, so anyway, I think perps ultimately, I'm sure everyone here shares this view, or at least some version of it, but perps do become like the on-chain, I don't know, end user kind of end game in terms of like degeneracy. But I think in one way too, like teams owe it to themselves to basically secure a listing on Hyperliquid for a fraction of what they would pay elsewhere. And Unit can of course help them do that. But like imagine like the funding rate trade for I'll just say it like Mega ETH or something like that, or Bera on Hyperliquid. Like these exchanges would get a massive chunk out of them eaten, honestly. At least I personally think. We're starting to see some pretty interesting numbers with the three majors that Unit has brought over, including Fartcoin, which does ridiculous perp volume as well. Anyway, I wanted to bring this up and see what you guys thought about that because I thought it was a cool direction, not talked about enough, not in threads, not in shows. So anyway, just throwing it out there.
But by the way, I have talked to makers about this, like market makers, and they do corroborate this. They're like, dude, the Hyperliquid flow is like the most profitable flow we've ever seen. because everyone's like James Wynn is out here with $1 billion Bitcoin notional position, just like with no real thesis. I mean, I'm not gonna. He had a thesis, but I mean, this guy is not Jump Crypto.
Did he? Yeah.
Yeah, but he's not like Jump Crypto or Liquid Fund or any of these like large sophisticated players that are on like centralized exchanges. And so they're dying right now to get on Hyperliquid. Some of them can't because of compliance issues, but they're like, dude, this is beautiful, like extractable flow that we want to market make for, because it's just so good. Like on-chain degens are just so much more.
Well, the liquidity. The liquidity you're talking about too, like, I mean, that's a tried and true thing. Like in crypto, like liquidity begets liquidity. Like once you have that, like it's the same thing with it's similar to, the on-chain coins. Like um, you'll see some of the best on-chain coins like launch with, and they'll have high liquidity, so whales can come in. Like, I mean, it reminds me of, I mean, the first thing that comes to mind is like Bohm back last summer, but like the reason that went insane is because the liquidity pool was at say like 3, 4, 5 million compared to your run-of-the-mill coin that launches that is at 250, 350, 400k liquidity. Like liquidity begets liquidity, and that is a thing that in crypto, like that's it's still like somehow a little bit underrated. And like I think the perp market for that is like, I know we're skeptical a little bit about like how much perps can grow, but like I'm in the camp that perps are, they're gonna the ascent is gonna continue. Like there's a reason that Robinhood and Coinbase and the US in general like just allowed legislation for perps to be liquid. And we'll see how that develops, but like that liquidity is the number one thing for me that like makes a difference between something that can continue growing and something that can't. So the spot market, like on Hyperliquid, like that I don't know, it'll take a little, like I'm more excited personally about the perp growth because of the liquidity than I am about the spot market. And like the spot market, like they have plenty of liquidity on there, but once that like starts growing, like how it does in AMMs, like then you're really cooking with fire.
I Sonny, one thing I wanted to mention, because you brought up that we're onboarding more people. Um, you know what I've been thinking about? Are you guys familiar with Axiom? I assume most people here use PvP Trade,
Yeah.
but so Axiom does both Solana and Hyperliquid, and I feel like that's actually quite a good way to get this new user base of people who are primarily in the Solana trenches to get into perps, because it's relatively seamless as you can make Solana to Hyperliquid. And that's one thing that I think we wrote about it 2 weeks ago, and I was thinking about that. It's like a whole
Mhm.
new class. And if you guys ever go on Twitter and you see these people who are in the Solana trenches, it's not like you and me. It's like 19-year-olds with 0.5 soul and a dream. It's legitimately dumb flow.
Yeah.
And like you mentioned, that's what people want. And I mean, these people can be onboarded potentially. I don't know how many of them are on Telegram, to be honest with you. I think most of them typically use Phantom, but either way, it's a good growth avenue. One thing that was actually kind of shocking is Axiom makes, I think, like 95% of its money off of Solana, and like sub 5% from
Dude, I
Hyperliquid.
think that's a great point. It's even more, I think. Like, I think only 50 bips of their revenue has
Yeah,
actually come from builder codes on Hyperliquid, which is pretty crazy.
yeah,
Yeah, because
But
they
yeah,
can't charge the 1% fees they charge
yeah.
on Solana transactions with the cap.
yeah,
But Katja, I think that's actually a good add on to the conversation, right? Because, whether we're talking about perps volumes or spot volumes, the reality is that, continued growth is coming from entities like Axiom that integrate Hyperliquid as a liquidity backend. I think often this discourse focuses too much on, Hyperliquid as an exchange alternative, right? People compare it to individual exchanges or individual, perps protocols. Um, but with the builder code mechanism, right, that allows someone to submit transactions on a user's behalf and charge, up to a certain fee threshold for doing so, which is different for spot versus for perps. We're basically getting to a point where you can have unlimited organizations, putting the work in for user acquisition and user retention. My hope is that within a year's time, right, like the builder code ecosystem looks like a proto Shopify, right? We're two BD schmucks from some far-flung part of the world, could, spin up a billboard, attract 10,000 users, and, cover their rent that way, right? Like that is, I think, the true bull case for Hyperliquid is that it just becomes this liquidity layer for so much and so many different niches. And Axiom, PvP, right? These teams have kind of shown what builder codes can do, and there's a lot I think coming to market over the next few months as well. So I'm personally interested to see at which point long tail centralized exchanges even just kind of throw in the towel
Yeah.
and say, hey, we can have pure profit by forcing our users to pay the fees we want them to pay, but then just delegating our backend basically to Hyperliquid, right? Like that can be pure profit and cut out 50, 60, 70% of the cost structure of a centralized exchange. And yeah, I assume someone will eventually do that. I think the math checks out at a certain point, and it'll be more than just Telegram bots making use of builder codes. It'll be the kind of centralized exchanges people have already onboarded to that make that call as well.
Yeah, I think just quickly here, I think like if you want to look at real users on chain today that are actually paying to use the service and not just there for like some sort of incentivized reward structure, it's just Solana trenchers and Hyperliquid like traders, and those are basically the two real user cohorts in crypto that I could see right now. Outside of like people that are just like doing stable swaps or dumping TVL into Ethereum. And so this is like builder codes are a direct pipeline into, I think, like a top two user cohort in crypto. Um, and people are seeing this. Like, I think I've spoken to multiple front ends now where basically like they're just like, yeah, these are the only two ecosystems we even want to focus on at this point.
Yeah.
It used to be Base and Solana. One thing I want to add is before I talked, I think most people don't realize that a lot of regional exchanges just use Binance on the back end, or like Binance order books on the back end. So the builder code doesn't really catch on very naturally when people explain like how this could be used. But a lot of the time, if you're a random regional exchange in some like country, you don't have
Yeah.
your own order book. You're just using Binance on the back end. So that's something to keep in mind for
And they
people.
pay a ridiculous amount too.
Yeah.
Like,
Yeah.
it's not as simple as you just plug and play, right? Which would make it a really ridiculous killer use case. But there's also so much that goes into it, right? Which is like local jurisdictional licensing and other forms of setup. I mean, it's actually ridiculous. Whereas like you guys remember the YouTube era with like Amazon FBA and like every motherfucker and their friend would sell like some sort of some course, say like, hey, I'll show you how to make like blah blah blah, like the e-course, e-commerce e-course guys. I think builder codes in its truest, most raw, insane kind of form will effectively put that to bed and make it look like kids selling lemonade outside. Because there is literally no product on planet Earth, like not even Shopify is this simple, not even Amazon is this simple. There's no product on planet Earth right now that literally hands you $4 billion of liquidity, says, hey, we're not going to charge you shit for this, and then you can go and make money on it. You could charge up to 0.1% on the notional value of a perp trade, and you could charge up to 1% on a spot trade. There's literally not anything on the planet that does that at scale or even like on a micro level of this. So yeah, builder codes alone should make Hyperliquid worth several other L1s combined. Builder codes alone in their truest form, especially if you attach the retarded premium to it that most of the things trade at today, especially when factoring in revenue. So that's not even talking about the exchange. That's not even talking about HyperEVM. That's not even talking about crazy things like HIP3. It's not talking about the fact that you don't need to pay a market maker for a spot listing. It's not talking about not needing to pay $5 million and a ridiculous amount of your token supply to centralized exchanges. I mean, this leads into the overarching thesis that nobody knows how to price Hyperliquid, and that's a objective fact.
Yeah. No, I mean, I definitely agree with that. And like, I think what you're talking about there, like one of the like core things for me is, the spot listings of coins that are say, between 50 to 100 million to maybe 200 million. Like these coins, like whether people want to, accept that they're eventually going to go to zero, scams, whatnot, like the spot listing is a major thing. Like I'm sure you guys see it in chats, you see it in um, on Twitter. Like one of the catalysts that people realize for spot coins is like, oh, Binance could potentially list this, like Coinbase could potentially list this. Like that is a major catalyst for what you know what the coin can go to. And so when Omnia, when you're talking about like HIP3, like I think it's still severely underrated by the market in the sense that anybody can pay for whatever listing. Um, and again, like that is a catalyst that people talk about endlessly in chats. Is like, oh, if this could get spot listing on Binance, if this could get spot listing on Coinbase, and then it's like, hey, here's this protocol where you can get, if you want the spot listing, you can pay for it. And like you're talking about with the amount that Binance and Coinbase, and I mean, we've seen these threads on Twitter too, like about how much they siphon
Yeah.
from either the token supply or what it costs to list a token. Like, and then, hey, here's this permissionless protocol that you can list any token on at any price. Like that is still seems fundamentally undervalued to me because the market, the amount of conversation that happens about the listing payments, what Binance and Coinbase, require for a listing, like that, you guys are aware, like this is an endless conversation on CT. And
Yeah.
so then there comes this protocol where actually you can pay a set amount, X amount for a listing, and that's it. You're done with. And I just think I think that aspect is severely underrated because again, like I mean, you see the pump swap volumes, you see the photon volumes, you see the axiom volumes. Like again, these coins could be worth essentially nothing, but like there's a desire to trade them, and Hyperliquid is set up to be in a position where you could get spot listings, you could get perp listings, like
As open finance, like everything they wish they could
yes,
be, essentially.
The HIP3 is you have to buy hype to stake it, right? Can somebody give me a basic explanation of this? I'm
Yeah.
very stupid, so very simplified a lot.
So with HIP3, anyone who has 1 million staked hype available to them would be in a position to then participate in perp market deployment right auctions. So every 31 hours, the right to deploy a perp would go to those who have put up that bond. So if the 5 of us each had put up the bond, the 5 of us could participate in those perp markets. If you win that auction, you are basically responsible for hosting, the price oracle that perp market uses. If it doesn't work right, your bond could be slashed by validators, right? That's social consensus essentially. And I would just add that the main thing to keep in mind too is that this is a decentralization vector. So HIP3 perps would not be hosted on HL.xyz, which is just one of many interfaces to the Hyperliquid blockchain. Right, so this basically opens up the perps market business, to anyone who can host this type of market on Hyperliquid. Right, the fees are there for the taking, basically. And I would just add, obviously 1 million hype, $40 million. That's quite steep. I would personally just, approach this conversation with the expectation that, lending or leasing markets will reflect this, and it becomes possible for, credible actors to source that without, having $40 million of directional exposure on their respective balance sheet.
I mean, I'm not.
that's
HyperEVM perps coming to a
that's
front end near you.
We're not
yeah,
doing that.
that's
We are not doing that.
Max, before we pivot, that's spot markets too, right? Because I think you said just perp markets, but
Spot
it,
markets is HIP1, so that is priced in hype now. It used to be priced in USDC. USDC, same as all other fees, would basically just go towards the assistance fund and just perma buy hype. And in this case, now HIP1, since the tokens are priced in hype as well, like the auctions themselves, which significantly bumped the cost per auction now. Funny enough, instead of a 10,000 USDC floor, it's now a 500 hype floor. The auctions have very quietly ripped back near 6-figure range. Funny enough,
yeah,
so that's been
no,
good. Yeah, and
but that
HIP3 is
makes
performing.
sense. And that makes, I mean, that's everything I'm talking about, and I think that we've alluded to about the other exchanges. Like, I mean, these exchanges are, they're juggernauts. Like, Coin is listed on NASDAQ. Like, Binance is,
Yeah.
they're one of arguably the most profitable companies in the world, like alongside Tether. Like, these these companies are that big for a reason. And so when you have some type of, whatever amount of hype it is, like to list a spot or perp, like that, that just, I don't know. It's an amazing thing to see in my mind because um, you open the floodgates to everything.
Tokes, you made a really funny point regarding BNB a second ago, or like Binance in general. So Coinbase obviously just has coin equity, but Bybit, obviously, hello Mantle, Binance with BNB, etc. So interestingly enough, CZ made a funny post the other day, which was like, "Oh, I had no idea that we had 75 or whatever the fuck the APR was to BNB token holders per annum." And it's like, I realized the other day that this is the most all right, buddy moment I've ever seen in my life, probably because this is literally them. Not just it's very much like the Big Short moment in the movie where it's like, why are they why are they laughing? It's like, oh, they're not, they're bragging. Well, it was literally like that comment because this is purely revenue extracted from token projects that list on Binance. This is nothing else. This is just Binance Launch Pool APR essentially, and that comes from you name it, insert project, basically paying the cartel extortion fee of getting listed on Binance that just goes straight to launch pool stakers, which, obviously speculative, but like who knows how much of that is actually controlled internally, right? Like that's obviously never going to be, that's never going to see the light of day, right? Whereas the backwards,
He's trying to get
massive
CZ
middle
to,
finger to that.
you're
What's
gonna
that?
get CZ killing me, dude. Don't say shit like that on the pod.
Yeah, all right. Cut the mic. But the backward reverse middle finger to that is literally Hype using essentially 100% of its revenue to buy back Hype. And I use the term buyback very loosely because I don't know why it's always irked me, that term in this case, because tokens were literally never sold. They were just distributed as we see on Max's headline here. They were literally never sold, right? Like they weren't sold to the market. It's not like they were placed on like infinite asks or anything like that and just like sold off into like some sort of concentrated liquidity curve. It was literally just given to everyone. Uh, no market makers, no OTC deals, no venture rounds. So what do you call this? Like you don't even call it a buyback because they were never sold. You call it some sort of, I literally can't even call it anything. S tier revenue accrual. I don't know.
Gas fee burn. I mean,
Gas fee burn.
HyperCore runs on trading fees as its de facto gas fees, and so far we've just been burning half basically, or the USDC half on spot, and whatever fees are being generated by the perps. So
Ledger is the global leader in digital asset security, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a comprehensive ecosystem of products and services, making digital ownership more secure and accessible for everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, introduced the world's first secure touchscreens, making it easier and safer to manage your assets. Alongside Ledger Stacks and Ledger Flex, they have also launched the Ledger Security Key app, offering a safer alternative to traditional password management. Follow the link in today's show notes to get started with Ledger today. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research.
I want to refocus this on one specific thing. I think this one will be probably different takes. Valuing Hype. When I did it, I'm going to start off with Sunny, and then we're going to do a whip round just because he has the valuation. Actually, I don't know any of you guys' background, so you might be better at it. But in my mind, it makes the most sense to do sum of parts. That's what I've done in the past. And HyperEVM is quite little, obviously because it earns less money. But to me, that seemed like the thing that could have potentially more growth, just because, as you mentioned, I'm also in that camp. I think you can take volume away from sexes, but I do think that there is a certain, like, it's a crowded space. These massive industry, like these massive companies already control so much of the market share. It's a tough space. So to me, it made sense that the HyperEVM would have to grow a lot more. And I basically did a sum of parts. But I'm curious, like, how you guys are thinking about it. If that makes sense.
Yeah, I did a sum of the parts too for my first report, and basically like, and the reason why is because if you look at like average pricing across crypto, like Hyperliquid looks like an expensive asset if you compare it to DEXs, but it looks like a cheap asset if you compare it to L1s, and that's because it's both. It's both enshrined. And when I did it, I think I threw like a very conservative multiple on projected perp dex revenues. This was before spot, like unit actually launched like spot BTC. And I think I got to like base case 8 bill for the perp dex, and then I slapped on like a 5 billion L1 premium because that's where like Aptos was trading around. And that was before the EVM was out. Now, when I look at, I just revisited the numbers today. So Hyperliquid already blasted through my bull case. Like it's like in terms of volumes, it's actually outperformed my bull case dramatically. I think it hit what I expected it to do around like 2027 already. And then and that's because spot is now like a huge contributing factor as well with like Hype BTC and ETH. And then the L1 is now a top 10 chain by TVL. And so you've got to re-rate both of those higher. And I think this is basically, I think the way I think about most crypto valuations is the fundamental stuff is kind of the floor. And then the speculative premium kind of emerges on a comps basis where you're basically looking at what can Hype flip in a speculative environment, and when everything changes, it goes back to, okay, like what does hype actually earn? And so in a speculative environment, I would be looking at something like, we already flipped Sui, I think. So like BNB as like a next target, maybe even Sol eventually. I think it can get there. But from a fundamental basis, like I think we're trading at close to, if not below, where if you want to do like an academic sum of the parts, like where it should be valued around like 30 to 40 billion or so. And by the way, like the team is constantly adding more sneaky valuation drivers into the hype asset. And so HIP3, which we talked about, if you think about it, right, let's say hype theoretically goes to like zero. It's like it's trading at 1 cent, but all the users are still on Hyperliquid. And so if you can deploy an HIP3 perp and make like, I don't know, millions of dollars off of the organic usage on the platform, then it's a no-brainer to stake that 1 million hype if hype is like ridiculously cheap. And so there are all these things that like, and if you're like a market maker or you're a trader and you're very, very active on Hyperliquid as a platform, you're also going to want to buy and stake hype, because at some point those benefits from the staking tiers, like the fee reductions, are going to outweigh the cost of actually buying and staking that hype. And so there are all these like sneaky ways that like Jeff is linking utility and utility to the token that I think will also play a factor. But if we want to do it in the most academic sense possible, as a research analyst, I think of some of the parts makes the most sense. And you look at some of these L1s. I mean, there are L1s. I mean, I think AVAX is below Hyperliquid in terms of the HyperEVM in terms of TVL, or right around that range. And AVAX is, I don't know, what is that now? Like a $20 billion protocol.
Yeah,
So,
something massive like that.
Yeah.
I don't. Sorry, finish up, Sonny.
And yeah, the last thing I'll say, which Omni has like kind of addressed before, is nobody knows how to value HyperCore. Like people have no idea what it is. Like I've talked to VCs, I've talked to liquid funds, very good ones understand it fully. But if you think about crypto's top use cases, this is the use case. Like trading perps, trading spot is basically like 90% of what makes revenue on chain today. And so there's no reason why HyperCore itself can't be valued as one of the like top 2, top 3 alternative crypto assets in the universe. And I'll end it there. I'll let everyone else take the floor.
Another big factor is the fact that Hyperliquid is the only one in, what is it, top 10 now, or just outside of top 10, I think top 11, that doesn't actually emit tokens or have like some sort of hidden supply somewhere. It is literally removing 2% of current circulating supply per month with its fees. And this was only accelerated by like a massive fee bump. I mean, it's not that massive. It's not like extractive. It's still extremely cheap compared to other places. But like Monk, for example, when you put out your report, or Bach, the same thing for you, like we didn't have these fees to actually base anything off of. So now like the fee increase has been significant. Whereas like a $1 million day, 500K day in terms of revenue was pretty normal before. It's like more like 2 or 3 million now, which is pretty insane. Obviously coupled with a ton of volume. Like now $10 billion in a day is like considered, wow, like that's cool today. Nice. When 20, something like that. Again, not just for the sake of volume must continue to go up forever. No, but it's just the fact that the team continues to stay relatively on point with regards to listings. More and more people get onboarded. Monk made a really underrated point earlier, actually, that I think just the general CT mind cannot comprehend. Compliance and just the ability to onboard to Hyperliquid is so misunderstood by the general public. Like 99.98% of people don't understand that people are forced sidelined because of their mandates on every single part of hype today, which is like buying it, investing into anything on it, I guess, because like there's, what do you do, right? Like there's that, and then the third one is actually trading on it. So how do you do it, right? Like there's several market makers like Flowdesk, and I've seen Winter recently that offer OTC services. I mean, so like these really interesting solutions have had to be crafted because HyperCore is this nascent, completely unique network that people have just had to essentially like Max and I had a joke for a very long time, and I think this is going to be very relevant to this. We had a joke for a very long time where VC and liquid fund managers essentially would start to very soon get really angry messages from their LPs. I don't think that specifically has started yet, but I think the kind of, I guess you could say, part 2, the micro version of that joke as well, has been that custodians would start to get really angry messages from their clients, and this has started. So there are several really large custodians that are coming to support HyperEVM and eventually HyperCore.
One quick point on that. If you look at these liquid fund returns, one, most of them are not that good. Two, the ones that are good are usually driven by like betting on the asset for that specific period. So in the last few years, it was Sol. If the next few years the asset is hype and you don't have exposure to hype, you're gonna get absolutely killed. And so you're going to figure out how to expand your mandate to buy Hyperliquid. Like I think it just has to be, if other funds are figuring it out, then you have to figure it out at some point. And so it's more of a question of when and not how.
Yeah.
Not to mention there's stuff that Hyperliquid could do fundamentally to improve like the compliance situation.
I guess what I would add to this conversation is just when we think about valuation frameworks and what makes sense versus what doesn't, right? I think the underlying assumption there is that there are forced deployers of capital. And in crypto, we have it now for Bitcoin, right? Like things like IBIT or MSTR, right? Like are kind of becoming more and more within the mandate of certain TradFi allocators. But in crypto, outside of Bitcoin, we're looking at a very momentum-driven asset. And so in my mind, I would say I don't really have like a price target. For me, it's more, what does the marginal demand profile look like at any given point in time? And what does the amount of leverage in the system look like at any given point in time? And I think what makes Hype very intriguing from that perspective, right, is even with the growth of the HyperEVM and the usage of DeFi applications on it, we essentially have, $13 billion worth of collateral available in the form of Hype at the moment. I want to say somewhere on the order of 600, 700 million of that has been deployed, to borrow stables against and what have you. And that's about it. And at the same time, right, you have the assistance fund mechanism basically eating away at circulating supply at all times. I think last time I checked, right, like we would have eaten away the entire circulating supply within 5 years. Compare that to literally any other asset in this industry, right? And it's just like unparalleled. So I think as we talk about valuation, as Hype becomes more and more consensus across the industry, I do think the animal spirits have yet to be deployed here. And I would just make the point, right, for those listeners that have been around for a few cycles. When you look at kind of the leveraged parabolas that played out for assets in the past, whether it was like BNB, Soluna AVAX, ETH, right? Those were all, in my mind, kind of like supply side crises, right? There's this ton of demand for these assets and a lot of leverage, and things exploded. The whole time, though, people were dumping, right? Like, how many ICOs were dumping ETH in 2017? How many insiders were dumping the whole way up on those types of assets back then? In 21, for example. And now we finally have an asset that, has a deflationary rate of 15% that's acting as a collateral, foundation for the ecosystem that's getting built out here. We just have not seen that before. So I personally track, certain metrics like, how long would it take for the circulating supply to get bought back, right? And I think that's probably going to be one of the more useful, multiples or kind of just North Stars going forward here, because it is such a peculiar asset and what is already a peculiar asset class.
I think that makes sense.
I actually wrote like a bearish report on buybacks a couple of months ago, and then people were asking me, okay, like why are you bearish buybacks but bullish Hyperliquid? And I was like, well, I think what differentiates like a bad buyback program and a good buyback program is whether the protocol actually makes revenue, and no one makes revenue like Hyperliquid. And so that's like a big differentiator. Like if you can actually buy back the entirety of your circulating supply, then yeah, that might be more effective than someone that's doing like 50 bips like every quarter.
Another thing there is that if you're like, I think if Hyperliquid was at 10% market share in perps, then I'd say maybe spend that money on acquiring new users somehow. But I think, like, my argument has always, so there's two camps in that, at least in like Blockworks research, is that one says you should just be reinvesting as much of your revenue as possible. I think the more realistic take, which is also my take, which is why it's the better take, is that you should add percent in either case, because crypto, like it or not, it is very much narrative driven still. And I think the buyback is a good narrative because it shows that your token accrues at least some form of value. It's not as efficient as other ways of, like, I think in equities, at least, I don't know about in crypto, it's like historically not as efficient as other ways of giving accrual to token holders or equity holders or whatever. But I think it's like in the case of Hyperliquid, I think it works. In most cases, I think buybacks work. That's been my overall take. Tolks, do you want to give a little? What's your
Yeah.
what's your take?
No, I mean, I would agree with a lot of parts that everybody said. I also am very I'd say just aware of what the market is doing too, because I think you should always be aware of that too. And Bach, I know you can pull up the hype soul chart. You can pull up, hype ETC. Like I think these things are important because it's also what the market values. And like, yeah, maybe you can argue hype is a little expensive here, but like you're talking about a token that if it doubles, it'll enter the top 10 of crypto tokens. And a double right now is like, that's not something anybody is necessarily pricing in. I think the I toe the line between like the fundamental aspect of things is very important. Like you were talking about Bach with Blockworks research, like there's, kind of a divide between what is, what are the fundamentals and what is the narrative. Like I remember talking 6 months ago when we had the initial hype pod, like in my bull case was not only the product, what it offers, the buybacks and everything, but it was also if Sui goes to XYZ, then hype goes to ABC. Like, and people can think that these rationales are, they're not smart, but like that's just how crypto markets
Yeah,
work. And like at some point at the end of the day, like you have to like the fundamental cap. Like I love that. I love getting into the nitty gritty of the fundamentals, but at some point you have to understand what drives these markets, and what drives these markets is maybe 10% fundamentals, if that. Like,
yeah,
of course, in a bear market, they become more important. And like, I think hype and, if we go into a bear market, like hype will be one of the better tokens you can look at and say, hey, they buy this amount back. They still have X amount of users, their spot volume for this, like the perp trading is not going to stop. Like all of that is important. Um, but yeah, so I just look at the top 10 and I'm like, hype's at 13 right now on CoinGecko, and it's like it would literally take a double to get into the top 10. Like that for me is simple enough to understand what the bull case is. And I know that's throwing out a lot of everything we talked about for the past, 55 minutes, but like that shit unfortunately matters, unfortunately, fortunately depends on your view. Like that stuff matters in
yeah,
crypto. And, we can all want a future where it doesn't matter, but in the current environment, like it matters. And again, like going back to what we talked about 6 months ago, it's just like if BTC is at X, then hype is probably going to be at Y. And, if Sui goes to X, uh, then hype is going to be at Y. And if Sol is at, you know, $80 billion FTV, like, okay, then what is the fair comp for hype? Like the comps matter, and I think the higher that BTC and Sol and ETH go, like I think the higher that the targets for hype get. And I know that's very I don't know, not practical, I guess, but like again, if you're ignoring that stuff in crypto, like I think investing and looking at the space in a wrong way. Like I would love for the day when fundamentals are the only thing that matters, and like eventually I think we'll get there. But in the meantime, like the comps going higher, like that, you see SUI going up in a straight line, like that's the best thing you can ever want as a hype holder, in my opinion.
Yeah, completely agreed. I think most people recognize that. I don't know if I would say 10%. I think this year might come to 2025. But it's
Yeah, but you know
definitely,
what I mean. Yeah.
yeah, I
Regardless,
completely
like
agree with you. 100% agree with you.
yeah,
Good
I would
thing.
just I'll end it with saying like I'm bullish hype. Like, and again, like you can look at like when we have that sell off going into the tariff bullshit, like look at what the strongest performers are, and like hype has tripled since then. Like to me, that is all you need to know. I think for the longest time, um, in previous like in 2023, like when Sol was going up, I think a lot of people just ignored it and thought like, but there was some signal in there. And then Sol ended up being the top performer for, the next 2 years. Like there is signal, and if you ignore everything, you ignore fundamentals, you ignore, the price of every asset, the FTV, everything. Look at what bounces the hardest from the bottom. And it's very clear that hype was that token this year. And I think there's a lot of similarities between Soul in 2023 and Hype now. And again, that has no comment on what those tokens offer, what the product offers. It's just what the market wants to bid the most. And that is more important than the fundamentals in a lot of times.
Yeah.
Good thing we have the Hyperliquid marketing machine. We're all part of the psyop.
Yeah.
I
No, but
The marketing department.
when marketing, Dev, any updates? But no,
Yes.
like it's a very crucial point to think of is like what bounces the hardest, and like hype was the thing that bounced the hardest. And to me, like you can be bullish on an asset, but until something like that bounce happens, you're not necessarily like, at least in my mind, like you're not necessarily convicted in your beliefs until you see that bounce. And then you're like, okay, not only am I right about the fundamentals of this asset, about what the growth trajectory could be, but also the market wants to bid it the hardest when everything falls. And that is just crucial.
This episode is sponsored by Citrea. Citrea is the first zero-knowledge rollup to enhance the capabilities of Bitcoin blockspace, enabling Bitcoin applications and unlocking Bitcoin's full potential as a programmable financial platform. With Citrea, developers can now tap into Bitcoin's liquidity to build scalable payment systems, privacy solutions, and more. Citrea is currently in its testnet phase and is approaching its mainnet launch. To learn more about Citrea, follow the link in today's show notes. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research.
I want to take us to the fundamentals one time, and then I'm going to end it. But before I get yelled at by the rest of the research team, HyperEVM. So I asked we have a data site. I asked Rod, who was kind enough to share with me some of the work that they started doing. This is not complete, and it might not be perfectly accurate, to be honest with you. If you can see, I can zoom in a bit, but Hype is, over the past month, it's at 1 mil REV, which is priority tips plus base fees. That is half of Arbitrum, but it is ahead of Avalanche, Polygon, OP, Aptos, ZK-Sync, Polygon, ZK EVM. It is not very impressive. I'm not going to lie to you guys, but I think this kind of shifts perspective a bit, is that the growth over the past 2 weeks has just been incredible. And I think part of this is people getting tired of the same old games on certain chains. Part of it is just that when you launch a chain, who talked about this? One of you guys talked about this, in that people, when you talk to builders, they're building on several chains. So originally it was, I think, like for the 2023, it was Base plus Solana, typically people focused on as a developer. More recently, I think a lot of people are focusing on Hyperliquid and Base and Solana still, obviously, because these are still very important ecosystems. And I think as more of those products come online, such as Kinetic, hopefully at some point.
Gib. One right precompile.
Bach, this is basically what accrues to stakers, right? if you're
This
looking at it this
is
way.
not what accrues to stakers. This is
So it's different from the Solana model in
it
Very
terms of
is
different.
who's accruing the value.
Very.
yes. Yes, I actually need to look at this because I don't want to get it wrong. I'm not sure if HyperEVM network fees are burned.
They are, yeah.
I
They
think
are.
Cancun,
They
they're
are.
probably
yeah.
okay. So if they're burned, they're kind of accruing in that they're just burned.
Yeah,
Um,
I think it's a completely different like accrual model compared to Solana, which
yeah,
if you're a staker on Solana, like you're looking at REV and you're trying to calculate like what you can get as a Solana validator slash staker. If
yeah,
you're on Hyperliquid, then you want to own the token, because yeah, Hype is
it's
accruing
burned.
that value back to the community. Yeah.
Yeah.
Some people have
Um,
argued to distribute some of this cash to like stakers and stuff like that, but DYDX
well,
did this, I believe. It was like 11% APR, and we all know how that went. And
The last before I forget, the last bullish thing I'll say about hype is you can't we live in a world where in the crypto world where alts continuously emit new tokens, over and over and over. Like that is the endless debate on CT about what is the supply of this, what is the supply of that, what's coming online, what's, a year from now, 2 years from now. I don't think people appreciate enough. Like it, it's um it's it should be appreciated more that, the supply of hype is known, what is out there is known, what is coming in the future is known. Like all of that really again, like I just don't think it's appreciated enough. And I think the supply aspect is something that we haven't talked about at all this podcast, but like that is it's one of those things that's very hard to quantify. But when you look at other alts, you look at other assets, you look at their emissions, and then you look at hype, and it's just like, holy shit.
yeah. This
So
is
I want that to be known.
no, that's a good point. This is something I'll also touch upon, and then we can end it. This is from my friendies over at ASX, and they have this dashboard. And over the past 30 days, they've bought back. Oh, the assistance fund has bought back nearly 2 mil hype, which is apparently 55 million US dollars. Max, do you have handy your little calculator for circulating supply? Do you know what it is?
it's roughly 33% right now.
Yeah, I mean, so hypeburn.fun is like the main calculator I use. I don't know if you want to throw that up on the
I will.
screen.
Hype burn.
Very, very fun website.
Hmm.
Yeah, I sent the link as well.
It's a great dash.
And then
This
it's
one.
And
under the
Sorry,
stat. Yeah, it's under the stats tab up top.
Oh,
feel free to hover over the bottom part of the pie chart when you would like some entertainment for a second.
Wait, what
Oh
are
yeah,
points at now? I haven't even looked. What is
Like
the
over
what is the
$180 per point now.
Damn,
Ridiculous.
eight
Yeah,
hundred is gonna be true.
yeah,
But yeah, I
800.
mean, I want to echo again. Like we're in a space where everybody is fighting for alt assets that aren't BTC, that everybody is arguing over, the supply, what's coming online, what's not. And like you have an asset in hype that not only buys back a shit ton of the supply, not only has the perp growth, not only has the spot growth and like a bunch of catalysts for future spot growth, but at the same time, like it's one of the only alt assets where you understand the supply and you understand what is coming.
yeah,
And like that, I think is still like largely underrated by the market.
yeah, that makes sense. This is a good website. I didn't know this existed, to be honest with you. I've just been doing calculations on.
For people are gonna visit the site, and like they should really factor in like two main things. Like when you go to the bar chart, like take a look at the remaining supply. Obviously, the team has taken a relatively generous amount, like 24% of supply, and like the remaining supply goes to community. It's literally just team, because obviously they deserve a slice, a more generous slice in something that they've literally built for years now. For those that weren't aware of how long Hyperliquid's been in development for, and then 42%, because it was 38 before, and now because of 4% of total supply being unclaimed at Genesis, there's now 42% of the remaining hype supply to be distributed, which is well over $10 billion today. And this could be distributed in who knows how, right? Like it could be like a ridiculous, like BNB burn style. Who the hell knows? I mean, is that efficient? Probably not, but it still technically would fall into going under the community allocation, I guess you could say, if it just didn't ever exist. And then ready for sale supply, which is something that was on that last chart that you showed as well, Bach, is very interesting. And Max brings up a great point too with regards to Hype being used across many different applications. Of course, Kinetic being one of them, but several others, money markets like Felix, Hyperlend, Hyperdrive, um, AMMs like Curve, Laminar, and several others. I mean, like there's just so many ways that Hype hasn't even yet been put to work. The HyperEVM amount of Hype, essentially with only 1.6 billion in TVL, is just infinitesimal compared to the TVL on some other chains, for example, right? Because other chains factor in the total amount of that token that sits on the chain, because there's no split between the network, so to speak, on different quote unquote accounts. But Hyperliquid TVL is well over 10 billion today, 4 billion in cash, which is like just as much as almost anywhere besides Ethereum. And again, USDC and like starting to pick up with Tether and whatnot. But then you have tens of billions of dollars on Hype there, which is not factored in because it's either staked or some of it, very small percentage of it sits on HyperEVM. And a lot of it just sits in wallets, actually. Like that's the ready for sale supply. It's literally just sitting in wallets, not staked. 194 million Hype. That's 90, almost 20% of the total Hyperliquid supply. I mean, it's pretty ridiculous. So putting this to work is going to be very, very exciting. And just overall something that is going to continue to, again, prove what Max just said, very, very correct, which is throwing on this crazy speculative and monetary premium to Hype as it gets used in so many different ways.
I think no matter what valuation metric you ascribe to or how you want to value Hype, it's pretty much all bullish. So if you want to use comps, it's bullish. If you want to use supply demand dynamics, it's bullish. If you want to use a fundamental fee-based model, like it's bullish. And so like any way you slice it, like it's just kind of an undervalued asset. So yeah, bullish.
That's a good note to end it on. I am going to take this all into account.
Buy more, right?
Yeah. Perfect.
I can't afford it. I can't buy any more Hype. I don't have any money. I need to shill some stuff. First of all,
0xResearch perps, man.
0xResearch perps. That's not coming. Do not say that. I need to shill some stuff.
Can't wait.
Check out Talks and Page One. Check out DeFi Monk. Do not check out Masari. Kinetic, hopefully at some point.
Soon.
Give right.
We're ready.
Compiled. Max, I never know what to chill with you, man, because you have a day job and then you are also Jeff's right-hand man, apparently. What do you want to chill?
An evangelist.
If he's listening, I'm not. No, I've been working on some stuff in stealth. And so hopefully I can share more next month about that.
Very good.
So yeah, just my Twitter account for now, and that's about it.
We'll include everything in the show notes, potentially even Sunny's tweets, even though they're Masari branded. But guys, this was fantastic. Thanks, you all for coming on and taking time to
appreciate you having us.
Appreciate it.